Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to go over some of the key events that are coming our way this week. We're going to look at some key markets. We're going to look at a few trade updates. Also, a little bit on the news cycle, which is very, very quiet today. Not a whole lot going on our economic calendar. We've got some T-bill auctions that sort of came across the board earlier today. We saw yields fall yet again, and that tells us that we're getting ready for more rate cuts, more dovish policy toward the U.S. dollar, more dollars in circulation, and really not necessarily the robust environment that the USD has shown in the past few years. We're definitely selling off the dollar, and there's no question about it. Right now, I'm looking at the dollar index. We're off about 0.25% today. That should be absolutely no surprise to anyone out there. This is one of those times when it looks like the dollar is going to keep going down, and as it goes down, what goes up? What benefits? Risk assets, commodities, pretty much everything else but the USD. So definitely a lot going on here today. So good to see everybody back in the room. Yes, sir. Good to see you. Bobby Bob, always a pleasure. Hi, Coach. New week, new opportunities. Looking forward. Absolutely. We're going to go ahead and dive into a few key markets. I think gold's absolutely broken out to the top side. We have a trade idea out on the Kiwi CAD that we're going to look at as well. And also that dollar index, that trend line that we outlined last week that was brought to my attention by a trader in the room. Definitely panning out to be very interesting. Could be a big-time long-term zone, so we're going to go back over that with the DXY as well. Andrea Gore, welcome to see you. Andrea, gold is moving today, 37.50. I keep watching for a correction, but might not get one anytime soon. You know, the trade idea from from Thursday, we were really trying to buy a pullback in spot gold. We wanted to buy a pullback, and just nothing happened. We can't get this market to pull back to save our lives. So let's go ahead and get right out to price action. You can see the gold market exploding to the top side. This is a 4-hour chart, and we are trending higher seemingly by the minute. Right now, we're printing about 37. We really outlined this key level, 37.50. Not really much doubt in my mind that we're going there. I would expect a little bit of compression, though, in that key zone. So if we do see some sellers right in front of that 37.50, we may sort of stagnate in this level for a day or two, maybe 3, maybe 4. But what the big picture says to me is 4,000. And there's really no question about it. In my mind, we're going to 4,000. I had it sort of by like mid-February. Man, it could come right now. I mean, it really could come by Q4. So what we're doing now is we're bidding in a dovish U.S. dollar. It's driving gold up. really in leaps and bounds. I mean, this is a 4-hour chart. That's just an absolutely breakout to the top side going back to the 18th of September. So what, about 4 days ago? Really a nice big break. And then you just rally. And you know, the more that we look for a pullback and try to stay patient, the more difficult it gets, because we want to be in the market. We want to get in on these moves, but the market has to come our way. And if we don't get that pullback, and if we don't get a really solid trade location, a good entry point to the bull, given where this market's trading right now, we could really get into trouble. We could step up and try to buy 37.40s, anticipating the immediate run to 37.50, and we could see a sell-off and a big correction. And that's one of those things where you just don't want them to lose money up at the top of a market like this. Now, when I say top, it's a relative top, meaning it's high compared to where we've been in the last few days, but there are no rules right now, guys. There are absolutely no rules on how high gold can go. There's no rules on how high metals can go. If you're going to trade this intraday, little 30-minute chart, go right down to probably that 8:30, right in that zone, about 10:30 a.m. Eastern time. Nice spike low, nice spike high. I would be looking to buy pullbacks even on a 30-minute chart, but you're probably going to have to suspend that strategy just because we're going to get into real flat markets typically towards the end of the U.S. session. Remember, the gold futures come off the board, I believe, at like 3:15 Central, somewhere in there. So when you do get that, the gold futures go off the board. Typically, the spot market really dries up. So you don't want to get caught in a flat market. Typically, every afternoon here in the United States, you do see a gold really trade flat. You've already seen it for about the last hour. So I would be looking to play a pullback, but how aggressive would we be? I would probably be looking at a 30-minute chart, and then I probably would be suspending my trade on this at least until the Tokyo Open. I think that probably would be when you would get back involved with the gold market. So there's a lot going on with gold right here. One quick look at silver, and then we'll get on with the program. But, I mean, silver is really in the same type of situation. Let's go to a daily here, and you'll see exactly what we're talking about. I mean, we had a pretty good idea what was going to happen here with the silver market. I felt very confident that we were going to get an opportunity to get a monster breakout up over 40, and we did. And we talked a lot about that 40 level and how big of a deal it was. Sort of had a proximity test back here in July. Then we sold off. And then we came right up to 40, sold off a little bit, and then it just exploded and really had a great opportunity for a great pullback trade really right after that break. But since then, I mean, that's just really been all over but the cry. And this market's moving north. Bidding is the rule of the day, really the rule of the week, and the rule of the year for silver. The sky's the limit for silver, guys. Right now, keep in mind that gold-silver ratio. Gold-silver ratio is the ratio of the gold price to the silver price. We've been trading right around 100 for a long time, and now we're coming down underneath 100. Now, gold pushing all-time highs. Silver not pushing all-time highs. Remember, if you're thinking about an upside for silver, it's a lot bigger than gold. Now, you say, Shane, well, you just said that gold can go as high as it can. Yeah, and really, there are no rules. We could see gold at 15,000. Who knows? Who knows how high it's going to go? But for silver, we've already got a pre-established top up here right around that 2011 levels. Those are right up around, 49.81. Boy, I think we test that area. And also going back to 1979. I mean, we're going way back. That's when I was born, was 79. But you look right there, high as 48, high as 49. What do you think the next big key level is? I mean, I would say 45 could get some compression here with silver, but 50 even, we have to really be anticipating the run all the way up to 50 even. Why are metals so bullish? Why are they so bullish right now? Dovish Fed policy, weaker U.S. dollar, and inflationary hedges. What? Gold and silver. Okay, that's easy. What else? Unrest, potential political unrest. We also have geopolitical unrest. We have the situation in the Israel-Gaza. That's really, I mean, that's starting to catch, it's been catching a lot of headlines for a long time, but more and more, it seems like every day. Also, Russia-Ukraine, there was a big strike by Russia over the weekend. Guys, the geopolitical uncertainty and the domestic political uncertainty here in the United States, or I guess the social uncertainty, it all is driving sort of an angst narrative, a market angst narrative, and you're seeing the flood to safe havens is very real. Gold and silver right now are those safe havens. So definitely interesting. If you're a metals trader, you probably don't want to make your mistakes to the short. You want to be long. No question about that. Let me see. Nick Diaz. Good to see you, Nick. Welcome. Tina Jing. Hey, Shane. Hey, Tina. How are you? Any news event could have some price pullback. I canceled my order from the last low. Yeah. I mean, these are tough. This is one of those markets where when we get the gold blowing out and we get silver blowing up, it's really hard to stay on the sidelines. You just want to buy it and walk away from it because the momentum is there. Can you from current levels? No, you can't. You have to be smart. We have to be very, very smart about what we're doing and try to get into the market on our terms and not chase price. The last thing we want to do is chase gold and silver, because bigger than life, you'll see a big pullback, and that's really what we want. We want to see a significant pullback on like a daily or a weekly, and then we can step up and buy retracement levels and feel really good about what we're doing. Right now, I would say a 30-minute chart, you could probably try to buy a retracement there. That's not as good as a daily or a weekly, but the markets are just so bullish. They're so bullish right now. So let me see. Teen, I canceled my gold order after the J. Powell speech low. As you said, it could pull back low. Any news could make the price drop in the future. No, not really. I mean, there's always news. Guys, there's always news events that can shake the commodity markets to their core. From a fundamental perspective, what could possibly send the U.S. dollar higher right now? There's only a couple of things. Number one is a catastrophe. Some sort of a natural disaster could send it higher. Some sort of geopolitical breakout, something that comes out of left field, like the COVID immediately, a COVID type of a scenario, sent the dollar through the roof before it plunged. Those types of things could send the dollar decisively higher, just because it is viewed during times of extreme crisis as being a form of a safe haven. Other than that, I mean, is the Fed really going to come out and say they're going to raise interest rates? No. Jay Powell talks tomorrow. We're going to talk a little bit about that. We've got folks talking right now from the Fed. I don't remember the gentleman's name, but he's speaking right now saying that we need more rate cuts, more dramatic rate cuts. Right here, Fed Governor Stephen Mirren pushes the case for a central bank to slash key interest rates. So the rate cut last week wasn't good enough for some of these governors. They want to slash it down to nothing, essentially. And this is sort of something you would say if you wanted to be considered to be the next Fed chairman. Interesting stuff, guys. Extremely dovish, though, towards the U.S. dollar. One of those things that I would be very, very skeptical about anything regarding a rate hike. You're not going to hear that. You're just not going to hear that anymore. And that's really going to be tough on the U.S. dollar. You're going to see probably major sell-offs. I'll go over a few of my projections and what I think is possible, definitely with the dollar index. But it's tough trading. And as far as missing trades, let me see. I canceled my gold order after the J. Powell speech lows. You said it could pull back lower. Well, I mean, I said that it could pull back lower, and I wanted it to pull back lower so I could get great entry. For me, that's trading. That's what trading is all about, is getting great entry. But I mean, honestly, if I'm sitting here telling you that something's going to go up or down in the near term, nobody knows that. Nobody knows that. We do the best we can with our technicals and our market savvy and our experience. From there, we try to put ourselves in positions to succeed. So if you guys have strategies you're trading or orders down, don't pull them because of me. Don't pull them because of me. I put trade ideas out there. You're welcome to capitalize on those if you'd like. But if you're in a trade and you're saying, Shane, what should I do right now? It's you got to follow your strategy. Here's one thing I will tell you to do. Before you get into each and every trade, make sure your entry's solid. Make sure you've got a take profit and a stop loss, and make sure that your leverage is dialed in. If your leverage is dialed in, you've got a complete trade, and you don't have to worry about it. That's for sure. Absolutely. Let me see. 3 Fed speeches. Why? Well, we got another Fed speech tomorrow. We're going to talk about that in just a second. I believe it's going to be Jay Powell in front of some committee somewhere. Not necessarily certain what the engagement is, but it is on the economic calendar. In any case, if you want to get involved with Switch Markets and the Switch Markets community, be sure to head on over to switchmarkets.com. Check out the brokerage service suite. Dave, good to see you, Dave. You do have an opportunity there to get live on thousands of markets, zero commission accounts, all sorts of different value-added things as well. So there was the Global Forex Awards in 2025. The retail winners were announced. This was held on September 11th. I was out of town in Europe, so I wasn't able to actually give you the live coverage of this stuff, but this was brought to my attention, and you definitely want to check this out. This came out of London on the 11th, and you definitely had some interesting stuff for Switch Markets. Really pretty good recognition on a few different awards. You can see there's a lot of awards here, a lot of folks that are represented in a ton of different divisions, and I'm going to go ahead and show you where Switch Markets came up well. The Global Forex Awards 2025, the world's biggest Forex awards announced, and you can see that 200,000 public votes cast, 400 standout companies. Switch Markets did fairly well. We had just an absolute ton of categories here. And just to really recap the awards, let's see. Switch Markets was officially recognized. It was the winner for the best MT5 broker globally. It was a winner for the best trading experience out of Asia. It was also the winner of the best partnership program out of Menya. So pretty good stuff. I know I've been talking with the folks over at Switch, and they're very happy with the showing that they made at those awards. So if you are in a municipality that is supported by Switch Markets, be sure that you get involved or check in or reach out to the live support team over there, and then get you up and running in no time. Right here, this is our trade update. You've got XAU USD. That's one of those things that we tried last week and we just didn't get it. But you can see our key level is still in play, 37.50. Be on the lookout for a trade idea. Probably not today. We hit up the Kiwi CAD, but maybe tomorrow, the next day, involving gold. I think you can scalp right in front of 37.50 and be just fine. But it has to be a scalp. You don't want to take a position against the grain here in this gold market, or you could get absolutely destroyed. Alpha, good to see you. Good live. Good. I'm doing well here. Feel pretty good about it. As far as what we have going this week, this was the trade idea that I put out earlier today. And this is your Kiwi CAD. And the situation's relatively simple, guys. This is one of those markets that's sort of in rotation. And what I mean by that is you got really this crazy candle back in April after the tariff fallouts and all the catastrophe. The market was crashing. We saw the U.S. dollar was all over the map, and pretty much all the global currencies were reacting in a crazy, crazy manner to the tariff strife that was coming out of the United States. That right there, that month really has set the tone, at least for a pair like the Kiwi CAD. And you see we're sort of trading sideways really since that. I mean, we traded largely inside of April's range for the last 6 months. So right here, what we're looking for is we're looking for a market to move. I mean, the market has to move. If it doesn't move, we're going to be in big trouble trying to figure out where it's going to move to. That's why I'm the first one to tell you that if you come to me and say, Shane, what's crude oil going to do in the next hour, 2 hours, or 3 hours? I'm going to say I have no idea. I have absolutely no idea. If you like it to the long side, great. If you like it to the short side, great. But for this pair right here, what we have to see is we have to see the price move and give us a shot to trade when the market is in a state of disequilibrium. Now, when we're in a state of disequilibrium, that means price is out of whack. That means the buyers beat the sellers or the sellers beat the buyers. But eventually, they're going to find a way to tighten up the market and actually give us an opportunity to establish an area of fair value. Now, right now, we look like we're trading at fair value. I mean, for the last 2 months, very, very tight rotation. And what I mean by rotation is the ranges are smaller. We're moving from left to right as opposed to moving from up to down or down to up. We're just sort of moving sideways. So if we're looking at something like the Kiwi CAD, the first thing I would say is this market looks pretty balanced. Monthly chart looks pretty balanced. Now, we're trading right around 81. Okay, 81.10, somewhere in that area as we speak right now. Back into this golden zone, 62% retracement on the monthly. Spike low, spike high. There's the pullback. And right around 80.19, 80.25-ish, I believe, or 80.26 is going to be the entry here to the bid. So nice support zone here, but we've got to see the market move before we can get involved. I really like that trade a lot. It's 80.26. You're looking at 81. Right now we're trading about 81.10, so we're pretty close. I mean, we're not too far, about 80 pips. We could easily get that draw in the next day or two. So I'm watching that relatively closely. For the week ahead, this would be one of those trades that's on my radar. Now, everybody, listen up. If you're holding shorts or if you're holding longs, that's great. Stick to your plan. Stick to your guns. I have no idea what your trading strategy is. We're going to learn a lot more about that when we begin the one-to-ones that are coming our way after our webinar drops. But when we start talking about what your trading strategy is, I genuinely don't know. I'm just showing you what I see out there and what the key levels I would be aware of. If I was holding shorts here, I'm not saying that you're wrong. Feel free to hold them. You got your stop loss. You got your risk management down. That's great. What would be a downside target potentially? 80.25, 80.26. You're probably going to get some static down in there. So if you're holding shorts, not bad. If you're holding longs for 50%, I don't hate that trade either. It could definitely work. We could definitely rotate higher. My mind, the way that I'm thinking is the market is balanced. I really have neither a long nor short bias towards this market at all right now. I'm waiting for this thing to move. And I want to see it. If it sells off a little bit and gives us a shot at 62% down there, then we got a fantastic opportunity maybe to make a trade or two. That's for sure. Let me see. Tina, can you trade with switch markets in China? You know, I don't know. The Chinese market is very sophisticated. And the reason why I say that is because the government essentially runs everything there. So it's not necessarily that I think that I would have to look into it. It's a great question. The best thing I would do is probably head on over to the front of Switch Markets, go to that support portal, that live support, give it a click and ask if they service China. Genuinely, I don't know. I know that a ton of business out of the Philippines and the Asia Pacific market. There's a lot of clients over there. So that's an area where it's definitely live and allowed. But remember, I mean, to be a broker, to be able to operate in certain municipalities, typically you have to be regulated or you have to fall under some sort of regulatory guidance. As far as China goes, I believe it's very difficult for anybody to be using anything that's other than a domestic trading outlet in China. But that I genuinely don't know. It's a fantastic question. Probably just ask the support team, Tina. That way you can get the right answer. Or I will look into it this afternoon and potentially get back to you on tomorrow's live stream. Good one, though. Definitely good note. Let me see. Nat Niles, do you not trade the New York morning session, Shane? Yeah, I trade it. Nat, I'm typically looking from about 8:30 a.m. Eastern to right around, I would say, 12:30 p.m. Eastern. For me, those 4 hours, about 6:30 a.m. my time to 10:30 a.m. my time, I pretty much see everything I need to see right then. And that's sort of a real arrogant way of speaking, because you never really know everything that's going to happen. But I don't stick around for the U.S. close. I've done it in the past. But what happens is my trading day gets way too long, and I get tired. And I don't like being tired. I don't like being tired and run down. I would much rather trade when I need to be trading, which typically when we're taking risk Tuesday, Wednesday, Thursday, that 4-hour block, about 12 hours a week. I know if I'm in the saddle and I'm sharp, that 12 hours a week, I've got a great chance to succeed and walk away with a winning week. Now, if I get strung out and I'm trying to trade from 6 a.m. in the morning to 2 p.m. in the afternoon, my time, I'm not saying that it's wrong, and I'm not saying that it's impossible to do, but from my experience, I tend to make more mistakes when I get tired, and I don't like making mistakes. Making mistakes, sort of as long as I've been in the market, they still happen, but I don't like it, and I find that when I'm tired, I make more mistakes. So I really try to make sure that I'm as fresh as possible as long as I can, and the way I do that is I limit my trading hours. Let me see, Alpha. Bitcoin. Yeah, we can go ahead and look at Bitcoin here real quick. It's a good question. Bitcoin down to about 112.2. This is the type of market that we just want to bid it. I want to bid it. I have no problem bidding Bitcoin, but I want a nice pullback. So right down there, 105.385 is just an absolute huge level for me. It's a monthly retracement. Do we get a washout underneath 110 and potentially a bid? I would like that. I would like that a lot. Do you think we're going to get it soon? I don't know. I feel sort of like Bitcoin has given us some great retracements and really some really good opportunities to get in. Right here was a fantastic opportunity back in August of 2024 last summer, and then a nice pullback right here earlier this spring, and then the market's absolutely exploded since that April sell-off and rebound based on tariffs. I think we have a fantastic opportunity to trade Bitcoin. I definitely want to be doing it to the long side of the market. I don't have any desire at all to go short Bitcoin. So for me, I'd be looking to bid probably 106.50s, maybe 107.5, somewhere in there. That could be a really good opportunity. As far as short-term price action on Bitcoin, I know a lot of you really love scalping crypto, and that's great. I have no problem with that. It really is where the action is. Right now, you're off 2.5% today. For me, my key level is definitely where I want to make my stand at. But can we go to a weekly chart and maybe get a better set of levels? Well, I mean, here's the weekly right there. Nice spike low, nice rally, boom, 1 week, 2 week doji, sort of a long-legged doji. It's almost an inverted hammer or a hanging man. And now you've got the big sell-off, and we're sort of stagnating right near a weekly EMA, our weekly 13-period EMA, which is at 112.398. Interesting level. That's a big one. That's a big zone that's in play right now. If that moving average really goes or gets taken out, then we may actually creep down to 105. Really take a look at really how tough that moving average has been. Tested it right there, went much higher, came down here, had a weekly close, and we immediately bounced back. I definitely see my 13-period EMA for the weekly as being a major support zone. Can you buy right now? I don't hate the trade. Excuse me, I don't hate it. I think you could probably bid it and be pretty happy with what you're doing. 112.5 is 50% retracement of this most recent 3-week runner. I don't know. Is the trade location great? 112, we know we've got an all-time high somewhere up around 125, so there is a little bit of room to go test that high again, which I believe we'll test it again. It just really depends on the timing of the whole thing. With rate cuts coming our way, it would sort of be silly to be betting against Bitcoin and crypto, because more money in the system typically means more money that's going to go in to something like a cryptocurrency asset class. Definitely risk on here. So if you get a pullback, maybe 111, 250, maybe 112, that would be a fantastic trade for me. I wouldn't have any problem with that. Probably have to come off another $1,000 to get it, or you can just bid it right now. You're right at the 13-week EMA, which is rock solid support. Do we trickle lower this week? We could. It's possible. Could we stop right here and rotate higher? Yeah, we certainly could do that as well. So, I mean, as far as Bitcoin goes, if I was trading Bitcoin right this minute, a bid, would you want to buy it? You go ahead and put it down, see what happens. Nice bid from this zone. Just remember, if you do take a long, say from 112 or 111, somewhere down in there, you probably want to stop yourself out underneath this Fibonacci retrace, or excuse me, this spike low, sort of our 100% level of this current Fibonacci, which could be around 107.86. And I'll be real honest with you, right down in here is where I want to take my long from. So if the market really crashes and wipes you out of this trade, then you got to be ready to turn around and go long again. That's sort of the way I see it. But this entry right here, it's not the worst entry in the world. It really isn't. It's not the worst. 13-period EMA, 50% retracement on the weekly. That's not bad. I mean, that's not a horrible trade. I don't know, a lot going on there anyways, guys. Let me see. Tina Jing. Hi, Shane. Which company's chart would you look at for the NZD CAD, please? I want to add it to my watch list, too. You know, I believe I just pulled up the number one, which would have been the FXCM, but also Oanda data. So if you were going to add something to your watch list, maybe Oanda, that's a pretty good one as well. Full disclosure, back in the old days, I was a writer for FXCM, so I don't really. They were nice enough folks to me. They were always very, very receptive to some of the ideas that we put out there. But I genuinely I haven't traded through FXCM. I can't vouch for their service suite. I just don't know. I know they're a big one. But here in the United States, when you're trading Forex, you're pretty much leaning towards the Oanda or Forex.com. So those would be probably the data feeds I would look at. But FXCM, if you use that as data, it's going to be pretty close. It's going to be pretty close. Yeah, on TradingView, yeah, you can certainly use it. I mean, FXCM on TradingView is a pretty good data feed. I mean, listen, those big brokers are going to be close. FXCM, Oanda, Forex, those are going to be pretty close. They really are, especially when you're talking about the majors or maybe currency crosses. The only time you can really get big differences in the data is like with your commodities. We saw that in gold like last year. I remember there was just a huge spike, and some of the brokers didn't have that spike because they weren't providing liquidity up at those key levels. I believe the key level was 2,000. So it was a while ago. But yeah, good question, Tina. Absolutely. You could certainly use that data. I would lean towards Oanda or maybe Forex.com. Let me see. Absolutely. Okay, guys, so that was sort of our call there on the Kiwi CAD. Definitely an interesting trade for this week, week 39, 2025. We've got a lot on tap for this week, but it's not a huge news week. It's not a giant news week, and that's a good thing. I think that it gives us more pure price action. Be ready for anything, though. I mean, I believe Tylenol stock is already under fire because there's going to be a big announcement later today about potentially linking some of these companies, these vaccines, and some of the Tylenol and some autism rates. That's coming out of the White House this afternoon at 3 p.m. Central. Be ready. That's going to be shortly after the U.S. close. So if you're leveraged into pharmaceuticals, or if you're leveraged into the sort of the healthcare industry, maybe be careful this afternoon. Just if you're going to be day trading, if you have long-term positions, I wouldn't worry too much about it. But this announcement could potentially sink some of the big pharmaceuticals and the biotech companies. We just got to wait and see what happens. In any case, U.S. T-bill auctions, that really was the event today. It wasn't much of one. We'll cover it just to sort of reiterate where we think monetary policy is going to go from here. Tuesday, Jerome Powell speaks. I'm not sure about the engagement just yet, but he is due to speak tomorrow. And I got to be honest with you guys. I'm going to go way out on a limb. And I'm one of those people that doesn't mind telling you exactly what I think. I think that we could hear sort of Jay Powell hinting at life after the United States Federal Reserve. I'm interested to see what Jay Powell says tomorrow. A lot of times these secondary events, though, it's not a Fed meeting. It's not a Fed announcements. It's not the Jackson Hole Symposium. A lot of these secondary meetings, they don't really do much for the markets. So I'm going to be watching that relatively closely when Jay Powell, when the presser comes out of what exactly he said or when he speaks. I believe that's tomorrow during the U.S. session. Consult your local economic calendar, though. You definitely want to beware of what's happening there when Powell does speak. New home sales is going to be the big news for Wednesday. Not necessarily a huge news day at all, but we'll be looking at that. EIA inventories, the WTI crude oil market, things like that. Thursday really is your big news day. Bank of Japan minutes, that's going to come out during the U.S. overnight. The Swiss National Bank, the SNB interest rate decision, that's going to impact the Swiss franc. So if you're trading francs, remember, Thursday during that European Thursday session, that London session, you're going to be hearing from the SNB. And, we're out here. We live in cowboy country out here in Dillon, Montana. SNB, the Swiss National Bank, the bankers, those are the real cowboys of the world. When they decide to do something, a lot of times they don't tell anybody, and they just do it. We saw that back in the old days. I don't remember the exact year. It was like 2013 when they depegged from the euro. They depegged the Swiss franc, and the market went absolutely crazy because they didn't really tell anybody what they were doing. I would be ready for anything on that SNB. That's probably the biggest economic event this week. And then we got durable goods as well. We're still looking for signs of recession. That won't move the markets much. Friday, PCE price index. We'll have the action for you. I think we'll be trading the fallout of the PCE price index. So that's the Fed's favorite inflationary metric. Be ready for Friday. That's a big one. Inflation right now is really on everybody's mind, but not as much as maybe a fading job market. As far as today goes, we want to generate momentum. That means we want to game plan, go over our key levels, go over our key markets. For instance, next we're going to outline the Euro USD, and I'm also going to look at the DXY. We've already looked at gold and silver. We got a pretty good market read there. We've got a market read on Bitcoin in our Kiwi CAD. So we've game planned pretty well. We've got probably 5 or 6 or 7 hot zones that are going to come into play this week, just starting out that we've recognized. That's a great thing to do on Mondays. Monday's not always the best day to trade getting back after the weekend. Depends on, how your weekend went. Sometimes we're not ready to go. Maybe we stayed up too late Friday and Saturday night. Maybe we ran that into Sunday afternoon. I always like starting the week slow. I know we're going to have plenty of opportunities. There's plenty of opportunities every week. There's no reason for us to rush. If we take our time and stick to our game plan, we will be better off Friday than we are today. There's no question about that in my mind. Years and years and years of experience sort of led me to that conclusion that oftentimes it's just best to wait. You don't necessarily want to force the pace when you don't have to. Remember, this is a marathon. It's not a sprint. There's no reason to try to make a ton of money today when we know we can make it tomorrow, Wednesday, or Thursday. News of the day, 3 and 6-month T-bill auctions. What are these? These are U.S. Treasuries. Essentially, these are what we call the risk-free rate. This is what the U.S. government will pay us for our money, and all we do is buy some T-bills. Well, these yields are down, and they're down big. I'm going to show you the charts here in a second. Over the last year, we're really down significantly. What that means is the lower yield means that we're probably going to see more money come out of the banks and onto the street, what I call onto the street, hitting Main Street. So is there really the emphasis, or not the emphasis, or the desire to pay a high yield when we're going through an easing process? No. You pay a higher yield when you're taking money out of the system. When they offer you a high yield on a bond or a T-bill or a note, what they're trying to do is they're trying to entice you to give you them your money to them. That's what they want to do. And the way that they do that is say, give me your money today. I'll pay you this high yield over time. And that's what makes it a decent investment for you. That's the idea. What is it going to take my money from me today? You're going to have to offer me something that I believe is worth it, and then I will give you my money, you will give me the T-bill, and you will pay me interest for my deposit. That's what it's all about. So when you see higher yields, you're trying to take the money out of the system. Essentially, you're trying to really limit the amount of liquidity, all right, and maybe hinder economic growth a little bit. Interesting stuff. Maybe try to attack inflation, take money out, make the money worth more, right? If the money's worth more, that means the cost of the goods is going to be less. Stands to reason. So what happens when yields go down, though? When the yields go down and you're not being offered a premium for your money, the bank comes to me and says, Shane, I want your $100,000. I'm going to give you 3.8%. I'm going to say, well, you were giving me 4.5% last year. And they're saying, well, we'll take your deposit, but we don't really want it. We don't need it. We don't need it as badly as we did last year. So when you see yields start coming down, that means that the idea of trying to attract capital isn't necessarily as strong as it was when the yields were higher. So the idea here is falling yields sort of signal a weaker dollar and more money in the system, essentially relaxed Fed policy, which means what? Rate cuts, quantitative easing. Stands to reason. It's pretty easy stuff, guys. You got to study it a little bit and just think about what it all means. And as soon as you do that, it'll all make sense. As far as the news of the day, this is your 3-month T-bill over the last year. What I just basically said, you're talking about rate cuts. Going back to last November, we were looking about 4.6. A lot of compression on 4.3. Now we've broken beneath 4%. These yields are coming way, way down. I would almost wager you're going to see, this 3-month T-bill probably in January. It's going to be down like at 3.25. And then if we keep cutting interest rates next year, you're going to see really light yields. So the bond market, probably not the best time to be putting cash. Well, it's not a bad time. I mean, the yields are still pretty high historically from where they've been, but they're not as good of a bet as they once were. Full disclosure, I've been in bonds for a long time now. That's sort of been my preeminent investment vehicle over the past, 18 months because the yields were pretty good here locally. They were up over 5%. It was worth it. But when they start coming down to 3 or 2 or 1, then it's just not even worth it anymore. And when it's not worth it, you have to go figure out somewhere else to put your money. Now, news of the day, U.S. 6-month T-bill. What does the 6-month T-bill look like? It looks really similar to the 3-month. We were up there right around 4.5 last November, about the last year at this time, right around 4.5, and we've just been on the freight train south really ever since then. So the acceleration of the sell-off, or excuse me, the decrease or the plunge in bond yields has really hit this August. Right there, compression right around 4.3, and over the last 90 days or so, it's really come down big. So that tells us we're going into a rate cut cycle. That means the powers that be are interested in potentially betting on a dovish dollar, a weak dollar, as opposed to a strong dollar. All of that means rate cuts. Not just one, not just two, not just three. Probably going to take us right down to 2.25%. My guess by the end of Q1 next year. I think this is going to get very aggressive, and most of it's going to be aggressive because of the new folks that are going to be running the Fed. No question about it. All right, let's go ahead and have a look at this DXY. Now, this was brought to my attention last week, and this really was a great chart. Something that I've been studying. I've been looking at this a lot lately, at least over the past, yesterday evening, I like to set the table for the trading week. And I was looking at this DXY, this dollar index monthly, and trying to figure out what exactly I think it is, what exactly could happen here. Couple of things. COVID panic right there, March 2020. You can see the dollar was absolutely crazy, rallied, and then it came off big. Why would the dollar come off big during COVID? Because unlimited quantitative easing, we cut interest rates to zero overnight, and that essentially said, well, that's really going to weaken the dollar. The idea was you were going to put as many dollars in the system as you had to, and that was going to sort of preempt or try to head off an economic depression on a global scale, and apparently it worked. I mean, at least if you're in your equities markets, it worked. So right down in here, we saw it saying, okay, that's about as low as we're going to go. Why? Because we had to start raising interest rates and trying to claw out of the quantitative easing cycle. And you can see right there, that's your big rally. So when you got the big rally there, that means that you're going to get tightening policy. The dollar's going to gain on everything else, yada, yada. We're in the opposite of that now. We are coming off big, really, since Trump was sworn into the White House. The dollar's taking it on the chin. This is really a great trend line right there from those COVID lows, those late 2020, early 2021 lows. That right there is your second touch. Well, right there's your second touch. We're on the third touch right now. This compression right here really suggests that if we do break beneath that trend line, which right now is somewhere, I'd say right around 96.80, maybe 96.5. If we break and close beneath that, there's a pretty good chance you're going to take a look at those COVID lows. Now, what has to happen to test those lows? You have to see rate cut mania. And we know that we're in for a new Fed chair. That's coming. That's coming next year. We're already seeing a couple of FOMC members under fire. We don't know the future of the voting, but we do know that the folks that are going to be nominated from here on in are all going to be in line with the Trump administration's views on what they believe monetary policy should be, and that is going to be relaxed, low interest rates, a lot of liquidity in the system. Really think about Japan. Think about Abenomics in Japan. That's exactly what we need to be thinking here, because we're really, the outlook for the USD has got to be dovish. So this pattern right here, I would be wary of what's going on right now in the dollar index. Huge sell-off this year, a little bit of a fight back in July, and then we've given back most of those gains. This is an absolute compression. It's what I would call an L formation, and an L formation is extremely dovish. Boom, boom. There's your L. Run and rotate. We haven't been able to sustain above 38%. This area right here, this still tells us that we're very bearish. Once we break beneath that trend line, look out. I don't believe we go down to 76. I would say that we probably, our port of call is going to be right there around those COVID lows, right around 90. I would be calling for 92.50 to 90 to be the bottom potentially if we break. So be ready for that. Be ready for that out of that dollar index. Okay, guys, let's go ahead and look at the Euro USD, and then we'll go ahead and sign off for today. Euro USD, always one of the most popular markets in the world. Everybody seemingly trades the euro dollar, and that's great. That's absolutely fantastic. As far as what we're looking at here with our 920 EMA crossover on the daily chart, not much. We had a bid signal right back here on the 12th of August. It's been a pretty darn good trade. I mean, you've rallied since then. As far as what we can expect moving forward with the 920, I was interested in potentially getting a cross under. I was waiting for the 9, which is our red line here, to cross our blue line, which is our 20, and that would have been a signal potentially either to exit longs or go short. We haven't seen that today. This has been a significant rally out of the Euro USD. We're up fairly big, right around that 118 level, 117.90. So that's bullish. Clearly a bullish break today. Are we bearish or bullish long-term, the Euro USD? I'm bullish. Would we consider taking a short? Yeah, we'd consider taking maybe a little bit of a sell-off if we got a cross under. If we can get this 9 to cross under the 20, we would consider that. But right now, it doesn't look like we're going to get it. We were close. If we got a negative close today, we might have had it. Now you're just breaking higher. Definitely a bullish signal for the Euro USD. Now, as far as our Fibonacci's go, a couple of things that we need to point out. Number one, I'm a fan of big round numbers. We've been looking at these charts a lot. This formation pretty much is our gold formation as well. And you can see what we have here is a bullish flag or a bullish pennant. Just depends on if you prefer flags or pennants. That right there is your run. That's your bullish run here on the monthly. And where is going to be your pennant formation? Your pennant formation is going to be right here. That's compression. So there's your break, boom, sort of a nice failed auction. Then we trade it inside, And now what are we looking to do? We're looking to break and potentially make a run at 120. I've sort of been on the record a couple of times saying I believe we're going to 120. I do believe that. I don't think that this thing's going to sell off in a big, big way anytime soon, but it could. You could see a big daily correction or something. But the monthly chart, I mean, that really is sort of a bullish flag. I mean, that's what it is. There's the run, sort of there's your trend, there's your compression, there's your break. So if we get a close maybe up above this level, this 118.30, if we get a monthly close maybe somewhere up in here, you would really believe that you're going to 120. And then the idea from there would be what? If we do get that break above that, then we start to think about how gold and silver behaved. We would have to consider that same type of price action above 120. That is the big round number for the Euro USD. There's no question about it. If you wanted to trade it right now, right this minute, we could do a lot of different things. We could go to our daily, and I could say, okay, what do we have? Well, I mean, do we want to sell it? I'm not a seller at all. I'm not interested in selling this thing. Spike high right there, sort of a spike low today. I would wait. I think that if you wanted to sell, somewhere right up in here is a much better trade location, maybe something like a 119.89, something like that. Get right in front of 120 and maybe try to scalp to the downside for 25 or 50 ticks. I think you could probably get that relatively easily. The only question is when does this market challenge 120, and how can we make sure that we are in position to get that trade to the short? The answers are simple, guys. Patience. Patience and a game plan. That's what it's all about. All right, everybody, so that's the week ahead. We've got some pretty good stuff coming your way this week. As far as our stream schedule goes, we're going to be doing a few workshops this week. Tomorrow's a live trading workshop, swing trading, the 920 EMA crossover. I'm going to take a look at some dailies and some 4-hour charts. We're going to outline potentially a few swing trades and also the methodology behind the strategy itself. The 920 is something that is quickly becoming one of my favorite strategies, one of my favorite ways to look at the market. I'm still a big Fibonacci trader and a fractal geometry guy, but I really see some potential in this 920, especially on the right time frames in markets that are liquid and that are moving. 4-hour daily chart, those are pretty good time frames to be trading the 920. So I'm interested. We're going to go ahead and do a live workshop on that. I'm going to show you exactly how to trade it and what everything means. Wednesday, we're going to go previewing a hot 24 hours on the Forex. We're going to look at the big time news cycle that is sort of that late Wednesday going into that going into that S&B meeting. And then we're going to look at that and all the events on Thursday. That's pretty much going to be when the market more than likely is going to be moving really heavily. It's probably Wednesday and Thursday and Friday too with Core PCE. And then Thursday, we're going to do a Switch Markets live trading webinar for Forex and futures. We're going to look at the Forex and futures markets. I'm going to point out some of the hot markets of the day. I'm going to talk a little bit about over-the-counter OTC trading versus exchange-based trading, which is futures. So that's interesting. If you're interested potentially in the futures markets or the Forex markets, which ones you should be involved in, I will take any and all questions on that live trading webinar. So be sure to show up and have something to ask, because I'm certainly going to be in the mood to answer. And then lastly is trading the Core PCE price index, and that'll be on Friday. We'll take a look at the Fed's number one inflation gauge. We're going to come in after the fact at probably the U.S. mid-session. We're going to go over the price action, what happened, what the report means, and what we might need to know moving forward as far as the U.S. inflation situation is concerned. All right, guys, that's a wrap. That's the week ahead. Remember, tomorrow the big thing is going to be Jay Powell speaking. Be ready for it. Look at your local listings. Check what time that's going to sort of take place during your local trading, and really don't let that economic event skew your trading. Manage your risk smart. Be ready to go. Don't let Jay Powell's volatility get you. I don't think it's going to be very volatile, but you never know. Jay Powell may announce his retirement. We just don't know. All right, everybody, I want to thank you for joining me yet again. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.